Yes, people, a very good morning, good afternoon, good evening, whenever you are seeing me. Hope your preparation is going well. I'm here with a video on amendments which are applicable to your November 23 attempt in auditing paper. I can say you are auditing an assurance paper. Yes. So, first of all, let me give you a clarity of how many amendments that we have in your current attempt. Let me tell you only and only one one amendment which is there for your attempt, that when I compare with your material that you have in your hand. For your attempt, we would have given you some 48th edition of material, which is nothing but the 49th edition of material for your auditing paper. The same material you are supposed to study, in which all the amendments of up till the previous attempt were covered. For this attempt, there is only one new amendment. Of course, you are seeing the statutory update file of ICI, in which you will find multiple things, but those are nothing but copy pasted from the previous attempts, and which are already asked in the exam also. So if I have to be more specific, only one specific amendment in this attempt, one new amendment, and one more other amendment which is coming from the previous attempt, which obviously becomes equally important for the current attempt as well. So altogether here, I am focusing on two amendments which are very important from exam point of view. Okay, and this video will be applicable to only and only November 23 attempt auditing and assurance paper. Okay, so with this disclaimer, let me start with the discussion of the amendments for this attempt. Okay, yes. So first of all, the amendment is in the company audit chapter. The first amendment is there in the company audit chapter. Now, what is that amendment, sir? Before that, I start about that amendment. Let me have a brief discussion of what is the main provision which is existing. Then we'll come into the amendments requirement. Okay. So initially, if you remember, the section number 143 of the Companies Act will talk about the rights and duties of the auditor. In the Companies Act, section number 143 will talks about rights and duties of auditor. In that, more specifically, we have section number 143 subsection 1, which talks about duty of auditor to inquire on certain matters. 143 subsection 1 talks about duty of an auditor to inquire on certain matters. 143 subsection 3 talks about duty of auditor. This is duty of inquiry. Okay. 143 subsection 3 talks about duty to report on certain matters. 143 subsection 1 talks about duty to inquire on certain matters. Altogether, there are 6 matters here. Okay. And 143 subsection 3 talks about duty to report, wherein we have total, I can say till now there were 14 points existing. Okay, that 14 points, now one more extra point is added, that is a 1 point. This becomes an amendment now. Till now only 10 were there in the section. The 10th point says that refer the rules, and the rules were giving you some 5 points till now. Okay, that 5th point now becomes the 6th point now. That's it. So one extra point is being added. Okay. So one amendment which is there in the section number 143 subsection 3, one extra point is being added. And let me tell you, the classes that I taught, so I did not make you write in the material, but yes, I have explained this concept in a chapter called Audit in an Automated Environment. We have discussed a chapter called Audit in an Automated Environment. There we have taken example for making this amendment to be covered. I explained in the class, but I was not telling you that this amendment has been notified. I explained this concept, but yes, I did not tell that this this amendment was notified. Now I am telling it, this amendment is being notified. So what is that, we'll discuss, no problem. So what I would say is one amendment which is there in 143 subsection 3, that is 1 point being added. Till now there were only 14 points, now it becomes 15 points. Yes, that becomes the primary first amendment. That becomes the only amendment which is there for this attempt. Yes. Further, one more amendment which is again there in the same Companies Act only, in the section number 147. Now this, sir, what is the amendment? Let me tell you, the material that we gave to you, the supplementary material that we gave to you when you were studying, when you were in the class, which was covering CARO, and also section number 147. The content which you studied in the supplementary material will hold good as it is. That content which is given in the supplementary material is after considering the amendment. But anyways, because this is important from exam point of view, we are going to again revise the entire content. Okay. So two amendments, one is from section number 143 of the Companies Act and also section number 147. 147, you need not have a separate material. Of course, we covered here, but anyways, this is already there with you as a supplementary material along with CARO, which was initially already given. Hope I am very clear now. Yes, so our discussion is about only 2 things here, section number 143, section number 147, very importantly. And 2 more amendments are there, nothing but those are not amendments actually. Those were coming from the previous attempts. One is issuing the shares at a discount. Can the company issue the shares at a discount? Initially the answer is no, but yes, if you are going for issuing a sweat equity shares, or that issue of shares at a discount is allowed as per the recognized policy, yes, that can be done. That is a question which is already coming in the previous attempt. In previous attempt the question has come because that was the part of your RTP in the previous attempt. Issue of shares at a discount was an amendment in the previous attempt that came in the previous attempt exam also as a question directly. So this attempt that doesn't become relevant now. Anyways, that was already covered in your main material. So I am not going to cover that. We are going to cover about only section number 143 and section number 147. Done? Yes. So let me start with the discussion of section number 143 subsection 3 first. My discussion will be first focusing on section number 143 subsection 1. Sorry, 143 subsection 3. In 1 there is no amendment. In 3 only some extra point being added. Okay. What is that point being added, sir? Very simple. See, if you observe in your main material, if I am not wrong, question number 24. In your company audit material, question number 24. In question number 24, we have the second point. Okay. In that second point, this towards the end of your answer, A, B, C, D points will be there as it is. We have copy pasted as it is to make you ensure that this is the continuation of the material. Okay. So the amendment part, extra new part, we have highlighted in the bold format here. Let's see that what amendment is. Okay. Whether the company has used such accounting software for maintaining its books of accounts, which has a feature of recording audit trail, that is edit log facility, and the same has been operated throughout the year for all the transactions recorded in the software, and the audit trail feature has not been tampered with, an audit trail has been preserved by the company as per the statutory requirements of the record retention. Oh my god, this much big statement, but the content is so simple. Don't worry. Okay, you are finding this statement to be very much lengthy, but the content is very much so simple. Okay, before I start with this discussion now, first of all, see here what I was telling you. 143 subsection 3 talks about duty to report. Now, what is the meaning of duty to report, sir? As an auditor, you are supposed to report on various matters. Okay, as a part of which even the Companies Act is specifically talking about section number 143 subsection 3, wherein whether you are having a positive opinion, whether you are satisfied, whether you are not satisfied about this. If you are satisfied, then also you are supposed to write in the audit report. Whether you are not satisfied also, then as well you are supposed to write in the auditor's report. Where you will write, sir? In audit report, we have various paragraphs. Okay, title, addressee, opinion, basis for opinion. Okay, that format we have. No, in that we have a heading called reporting on other legal and regulatory requirements. Reporting on other legal and regulatory requirements. Under that heading, no, all the legal matters I am going to write other than the standards auditing requirements. Right? So this 143 subsection 3 matters whether you are satisfied or not satisfied. Both the things now should be written in the auditor's report. But the thing is very important. If you are satisfied, you need not write any reasons for that. If you are satisfied, you need not write any kind of reasons for that. Okay. But if you are not satisfied, no, that means you are going for a modification. I mean to say negative remarks, qualifications. You are supposed to write reasons for that under section number 143 subsection 4 of the Companies Act. What he says, simple. If you are writing a positive comment about this this extra point being added, this is nothing but all these 15 points, no, you need not write any reason for that. But if you are writing any negative comment about these contents, no, you are supposed to clearly write a reason why you are giving a negative comment there, under not section number 143 subsection 3, but under section number 143 subsection 4. Hope you are clear. Yes. Yes, with that background, let me come to now this content point number F here. That is nothing but 6th point in the rule. What I would say, section number 143 would contain altogether 10 points. Okay. In the 10th point, no, 9 points are nothing but contents. 10th point will contain refer the rules as may be prescribed. As may be prescribed, how many points are prescribed? Till now only 5. Now the 6th point. Yeah? Let's see the content. What is telling here is very simple. Whether the company has used such an accounting software for maintaining the books of accounts, which has a feature of recording audit trail or edit log facility. This is the first and foremost statement. What is the statement? Whether the company has used such an accounting software in maintaining the books of accounts, which has a feature of recording audit trail, edit log facility. That becomes the first part of this provision. So what is this audit trail, sir? What is this edit log facility? Before that, what they are trying to tell is indirectly, as a chartered accountant, as an auditor, you try to write whether is the company using a software for accounting or not. Are they following a manual methods or automations? You are supposed to report on that. If they are following automations, whether that automated software, that accounting software, is it having a feature of audit trail, that is nothing but edit log. Now, people who studied from my class would be already knowing what is the meaning of audit trail or edit log. If you remember, I was taking a simple example. Let me take that example again now. So let me take a Word file here. This is the software in which let's say this is a complete new file. Okay, now this is a complete new file. Here, what I am doing is, let's say I am like A, B, C I am adding here. Yes, A, B, C is the text I am adding here now. Let's say below I am giving the text 1, 2, 3. I am below I am giving the let's say exclamation at the rate hash, and below I am giving, let's say, A, 1, B, 2, C, 3. Let's say this is the content which is there. Okay, now this is the content which I added to this software. Now this is the content I added. You remember all this now? Yes. Let's say I am saving this file now. I am closing this file. Now again I'll open the file. Let's say this is the content which I prepared. Okay, the faculty prepared it. Now let's say some other person is opening this file. What is happening is that person now is deleting ABC. That person is deleting ABC and saving it and closing it. Now once I reopen that, now what you are finding here, the content, actually what was the content? ABC, then 1, 2, 3, then this special characters, and then the content. No, but what was happening, because some other person is going to access that, the content got missed out now. Yes. So what was the content there existing here? It was A, B, C and 1, 2, 3, then these all. No. So to ensure that this kind of, once the data is being added to the software, once the data is being added, any kind of deletions done, any kind of additions done should be clearly known to, like should be clear, be in a position to identify. What I would say, once the data has been added to a system, has been added to a software, you should be in a position to track what are the changes that are made till now. From the initiation of the recording of data till now, what are the changes made, how many steps it was coming through. It should be having a complete track. To ensure that, what they are telling is, there should be an option called audit trail, nothing but edit log. What that feature is, in your Microsoft itself, we have a review option. Here you will find something called track changes. In your Microsoft, the way we have track changes, no, the same way in our accounting software, there should be a track changes file. What I am doing here in the Word, no, I am adding something called track changes now. If you see here, what I have done, I have gone to track changes, I have turned on it. Now you are finding this to be highlighted. Okay, that means I turned on the track changes. What would happen here is, now the same thing which I have done previously, now I will do it. What I have done initially, what I have done, I have reduced what I have taken off ABC. Okay, I have deleted ABC, I have saved the file. Okay, instead of one, what I have done is, I am adding now, initially it was what, capital ABC. Now I will add small ABC. Okay, I will make enter. I will delete 1, 2, 3. I will delete 1, 2, 3. To the exclamation before, I will add some star here. Okay, I am adding star, brackets open, bracket close. Now below, instead of now this is the data changes I have done. Okay, I'll close this file. I'll close this file completely. I'll open back the file again. I'll open back the file now. If you observe carefully, what is being identified here? What have you identified here? Simple. Whatever the changes I have done now are being completely reflected as it is. Correct. So initially the capital ABC was there. I have removed that. You are finding a strike here. Yes. After that I added ABC, A capital BC, extra added, it's being shown in red color, 1, 2, 3 removed, star, open bracket, close bracket added, so which is being reflected in a red color. So what they are trying to tell there, so these were, see if you observe what they are doing, system number 8913 on 17th of September, so and so 12:10 PM, content was deleted. This much clearly system is tracking everything. Hope you are understanding now. So this kind of feature is there in what, your Microsoft Word na? Yes. The same kind of feature should be there in your accounting software. The company should be using such a software, accounting software, which has this kind of feature, which can be called as what? Which can be called as a edit log, nothing but audit trail. Audit trail or edit log is nothing but a track which will a record or a track which will maintain from the initiation of the transaction till the time of the reporting of the transaction. What is the flow of the transaction? How many times it was added and deleted? How many types of modifications were done? Who has done the modification? When that modification was done? Every record will be maintained. Okay, but why these specific requirements? Very simple. Managements and TCWGs and employees know, to ensure that they are going for fraudulent financial reporting. for either showing a higher profitability or lower profitability, they are making some kind of dummy entries, fictitious or ghost entries. They are intentionally deleting the purchases, intentionally deleting the sales entries to ensure their expected profit. Instead of showing the actual profit or actual loss, what they are doing is first they are making all the entries. Okay, after making all the entries now, they'll find the profit is so and so. What they'll do now, they'll try to delete the entries so that their profit will be reduced or increased as accordingly they required. Understood? These kind of things are done now easily, which can be tracked now by the auditor, which will help in auditor finding out the audits frauds and errors easily. For getting the point, very simple. Now, edit log audit trial option should be mandatorily there in all kind of accounting software. That is a mandatory rule for the companies. Now, as auditor, what is my responsibility? I have to report on whether, first of all, company is it using an accounting software which is having a feature of what? Audit trial or edit log. That becomes the first point. Hope you got the point. Yes. So let me go to the second part now. And here and the second part, both are mandatory, no? And the same, what the same? Nothing but the audit trial or edit log has been operated throughout the year for all transactions. Has been, the same has been, let me change the color now here. What they are telling, the same has been operated throughout the year for all transactions recorded in the software. That becomes the second point. Basically, like I am dividing into parts and telling that. What is telling there? The same, that is nothing but the audit trial has been operated throughout the year for all transactions recorded in the software. Okay, so what I told, when I was telling you about this Microsoft Word file, no, initially without adding this trial option, the trial option which I added no here, so this track changes option I have added, no, this was initially there or not there? Not there. I was turning on. So what they would say is, from the start of the year till the end of the year, whatever the transaction happening, no, the transaction should be happening with the enabled option of track changes. In Microsoft Word, no, the same way in the accounting software that you are using, no, the edit log, that is audit trial option, should be enabled for the entire financial year. Merely having the feature of audit trial is not sufficient. Simple, your mobile is there, in that you are having a SIM card. Having a SIM card is a mandatory thing. Merely by having a SIM card, no, it doesn't ensure that you are using the SIM card. You have to turn on the data. Yes, the same way, the accounting software being used by the company might be having an audit trial option, but they may not be turning on that. So what they are telling, that audit trial option should be on for all the transactions which are happening from starting of the year to the ending of the year. Nothing but completely. Understood? That becomes the second meaning. Yes. Now let me come to the third meaning. What is the third point they are talking about now? Let's see the third point. The audit trial feature has not been tampered with, and the audit trial has been preserved. So let me take the other way around. So this becomes one more point now. 1 minute. What they are telling there? The audit trial feature has not been tampered with. What is the meaning of tampering? Nothing but like doing some kind of wrong things. What may be done? The audit trial may be changed intentionally. They might modify the audit trial. No, that means maybe data might be deleted. But to avoid that, people might have deleted the trial also. So that kind of tampering should not be happening. Tampering is nothing but fabricating. Nothing but doing intentionally some alterations. That kind of tampering should not be happening. Yes, and further they are telling one more explanation there. What is the other content? The audit trail has been preserved by the company as per the statutory requirements of the record retention. Altogether, how many points they are covering there? In a single point, they are covering total 4 areas. What is the first? Let me go one by one now. What is the first point there? What was the first point covered? See, the entity should be following an accounting software which has an option of audit trail or edit log, which will track all the changes in the system. Correct? No. Second, what they say, that point no should be turned on for the entire financial year for all the transactions. Third, it should not be tampered. Third point, it should not be tampered. Fourth becomes, the audit trail has been preserved by the company as per the statutory requirements for the record retention. Common sense. How many financial years you are supposed to retain the books of accounts and your finance statements? If you are in the current year, past 8 years you are supposed to I can say retain. Except no, current year in a financial you will be anyways maintaining. Except current year, the past 8 years record you should be retaining. Okay. After that, if you want, you can scrap of it. You can ignore that. Okay. The same way, what they would say, section number, this all content would be there if I am not wrong in section number 128 subsection 5 of the Companies Act. So, take other way around if I am wrong. So mostly I'll be correct. So section number 128 subsection 5. Yes, I'm sure. 128 subsection 5 of the Companies Act says that the books of accounts and the financial records maintained by the company should be retained for a period of 8 financial years except for the current financial year. I mean, current financial year anyways will be there. over and above the current financial year, the past 8 financial years record should be maintained. That is 128 subsection 5 requirements. So which the same requirement of 128 subsection 5 will be as it is applicable to even audit trail also. What is the meaning of that? The way you are maintaining the books of accounts, the way you are maintaining the supporting documents, even audit trail also should be maintained for the 8 years period. Are we clear? So total 4 points are covered. First one, accounting software should be used which has the feature of audit trail, that is nothing but edit log. Second one, it should be turned on for all the transactions. It should be there for all the transactions. Third one, it should not be tampered. And fourth one, it should be retained for a period of 8 financial years. Whether these are being properly done by the entity or not. See, these to be done by the entity is a separate requirement. Whether those are being properly being maintained or not, who has to report on that? The auditor has to report on that. What they would say is, these should be there. These should be maintained by obvious preparation of finance statements. Designing and implementation of internal controls becomes the responsibility of whom? The management, and of course those charged with governance. Whether that has been properly done or not becomes the responsibility of auditor. Yes. So all these maintenance becomes the responsibility of management only in the governance of TCWG. But whether that has been properly maintained or not, who has to report there? The auditor has to report that. Done. If you are satisfied, yes, we will write the company has used for let's take an example. Okay, very important. This time the question may come in exam. This question may come for 4 marks. Okay, because 4 points are there. It's clearly evident. Be careful. They may ask you what are the requirements of the section number 143 subsection 3. Like clause I can say I, not clause I, clause J, and requirement of point number F. They may ask you section number wise. Instead of asking section number wise, they may ask you the auditor has to report on whether the entity has an audit trail. Explain, they'll say. After the entire point becomes very important. Mostly the question will come in exam, damn sure, mostly. Okay. So 4 points are there which will fetch you 4 marks there. Okay. But what if no, you are satisfied about this? You are satisfied. What you will write? You will ignore completely? No. 143 subsection 3 becomes the duty of reporting. No. Either you are satisfied, not satisfied, both you are supposed to report. What you would report? You will say the company has used such an accounting software for maintaining its books of accounts which has a feature of a recording audit trail, that is edit log facility. First point close. And the same has been operated throughout the year for all transactions recorded in the software. And then you will continue. See, simple, that question you change into answer. Instead of whether the company, no. If you will remove whether, the answer becomes the point. Okay. What if you are telling like, you feel like, okay, some mistake is there. Example, company has a software. It's using edit log. But it's not on for all the transactions. But it's on for transaction, but not on for all transactions. What you would say is, till here you will say everything okay, but now further, the same has been operated throughout the year for all transactions recorded in the software except for so and so. You have to give a list out reasons. Always remember, section number 143 subsection 3, you are writing a negative remarks. This is qualifications, adverse remarks. You are supposed to write a reasons for that. Without writing reasons, you cannot give a justification. You cannot write a like qualification. I hope understood. Yes. So this becomes the very important, most important, first and foremost amendment. Let me tell you, this is the only amendment for your attempt. Okay. Now coming to the second point, what I told, what is the second amendment? That is nothing but your section number 147. No, 143 subsection 3. I mean the 15th point we completed. Now the second is what? 147 subsection. Section number 147. No, this 147 we are supposed to discuss now. Now what is this 147, sir? Let's try to understand. So 147 already you know, we'll talk about the punishments for non-compliances. So what kind of punishments, sir? For whom the punishments, sir? That punishment will be applicable to the management. I mean the office, I would not say management. The punishment will be coming to the officers. The punishment would be coming to the company also. The punishment will be coming to even the auditor also. Correct, no? So there the values now were changed. Of course, now I am not going to talk about the old values here. I am completely talking about only new values. Now, what is the exact amendment, sir? That is being clearly shown in this chart. So let me zoom out this now. Okay. So we tried to make that come into the entire chart here. Okay. The point is, when the provisions which are there about the auditor and audit, which are there in the Companies Act, nothing but coming from section number 139 to section number 146. These contents, if these are being violated, these contents are being violated by the company. If company is violating, of course I can say company is not a natural person, it's an artificial person. When I say company is violating, who will violate? Officers and employees will violate. If there is a violation of section number 139 to 146, what they are telling? there will be a penalty imposed on both not only company but also equally who are the officers on default. And the company, there will be a penalty of minimum how much? 25,000. Maximum how much? 5 lakh. This will be there in your supplementary material already existing. No change here, okay? The material that you have is completely sufficient. No change required. 25,000 is the minimum range. 5 lakh becomes the maximum range. Further, every officer will be having a liability of minimum how much? 10,000. Maximum goes to how much? 1 lakh. Minimum 10,000, maximum 1 lakh. Okay. This will be decided by the maybe ROC, maybe the tribunal. It depends on the case being filed, where the case is being filed. Okay. But minimum 25,000, maximum 5 lakh for the company. For officer on default, how much? 10,000 minimum, 1 lakh maximum. Sir, will there be both the liabilities? Yes. This should be paid by the company from the company's account. This should be paid by the officers on default. They should pay from their personal account, not from the company's account. That is the reason we are giving both penalties. No, both are mandatory here. The company should pay that, even officer should pay that. But officer should be paying from whom? From their own pocket. And one more thing, sir. What if two officers are in default? Now, these kind of questions also will be asked by people. Okay, sir. What if two officers were there, not one audit officer? What will happen? Every officer will see. What is what? Every officer. The word is every officer. Every officer will have an equal liability of 10,000 minimum, 1 lakh maximum, which would be defined by the relevant regulatory authority. It may be ROC, it may be NCLT, it may be court also, depending on the case where it's filed, where the status was there, case status. Be clear? This is on company and officers. Now coming further, very important to auditor. And the provisions related to auditor, section number 139, 144, 145, which more of talk about responsibilities of auditor. The auditor will be covering more of 139, 144, 145 will talk about more of auditor's responsibilities. If these provisions are contravened unintentionally, without knowingly, minimum how much penalty? 25,000. Maximum how much penalty? 5 lakh. Or 4 times the remuneration, whichever is lesser. This is as it is there in your material. What would say? Minimum becomes 25,000. Maximum becomes either 5 lakh rupees or 4 times the remuneration, whichever is lesser. But what is the meaning of remuneration, sir? This remuneration is being covered already in the section number 142 of the Companies Act. Section number 142 of the Companies Act says that the remuneration of the auditor means, I can say audit fee payable to auditor. Along with that, I can say any kind of facilities extended to him and any kind of expenses incurred by auditor. 3 points. When I say remuneration, the word remuneration means it covers three things. First one, any kind of fee payable to auditor by the client. Fee payable to auditor. Along with that, any kind of facilities extended to him. Example, you provided some accommodation, you provided some facilities of lunch and dinner and breakfast, or you provide him from transport facility. All this becomes a kind of facilities extended to him. The cost of facility extended also becomes the remuneration. Okay. Further, what we would say, any kind of expenses incurred by auditor. Let's say on behalf of you. Let's say for the purpose of conducting audit, auditor is incurring some expenditure. Let's say he appointed an expert for doing some kind of valuations. That expert's money, in the agreement, if it's written that company has to pay, but let's say auditor paid it, he will ask for a reimbursement. Even that reimbursement also will come as what? Auditor's remuneration only. Okay. So remuneration should be decided this way. So you'll take remuneration into 4 times or 5 lakhs, whichever is lesser should be taken as a maximum value. Okay. Yes. Now coming to, if auditor knowingly or willfully contravened, intentionally, I mean to say fraudulently, knowingly or willfully with the intention to deceive company or others, willfully, fraudulently. Okay. If you are doing it fraudulently, what would say? Imprisonment up to 1 year. Here in between there should be and. Okay. There should be an imprisonment up to how many years? 1 year. Up to 1 year in the sense what? It should be maximum up to 1 year. It cannot be beyond 1 year. The auditor should be sent behind the bars. Maximum up to how many years? 1 year. It cannot be more than that. Okay. That will be decided by obviously the tribunal or maybe the court accordingly. Okay. Further, fine. Not only imprisonment, along with imprisonment, both the imprisonment and penalty also. What is the penalty? Minimum 25,000, maximum 25 lakh, or here not 4 times, 8 times the remuneration. Minimum is 25,000, maximum either 25 lakhs or 8 times the remuneration, whichever is lower. These two should be checked first for deciding the maximum limit. Then I'll again minimum maximum compare. And between this minimum and maximum, who will decide? According to the relevant authority will decide it. Okay. Not only this becomes the penalty content and imprisonment content. Along with this, no, the auditor should be refunding. See here, where auditor has contravened under subsection number 2, he shall be liable to refund. Very important, refund the remuneration received by him from the company. entire remuneration should be refunded. Okay, and pay for the damages to the company, statutory bodies or authorities, to members or the creditors, everyone who got, see, simple, any person incurring some damages because of your wrong action, because of your non-compliance of section number 139, section number 139, section number 144 and section number 145. What they would say, you have to refund back the entire remuneration. Not only refunding, along with the refunding, you are supposed to go for paying for extra damages also, to the extent of damages incurred. There is no limit there. You have to pay the penalty to whom? The regulatory authority. Along with that, you have to refund the company remuneration to the company. And further, what you are supposed to do? You are supposed to pay the damages also when you contravene this intentionally. Be clear. And further, they are expanding. They are telling what? Now, for this purpose, no, like here we have two. If I talk about auditor, no, we have two things here. What is that? First one, imprisonment. Second one, what? Like I can say penalty. This imprisonment I can call it to be what? Criminal liability. Criminal liability, we call it to be criminal liability, imprisonment. But this we call it to be what? Fine will be called as civil liability. So if I talk about imprisonment, sir, if I talk about a partnership forming appointed, who will be sent behind the bar, sir? Those partners who are actively participating in willful misstatement. Those partners who are related to that willful intentional wrong, no, those people will be sent behind the jail up to 1 year. Everyone, those who are involving in that. But if I talk about the fine, no, fine will not be imposed on those partners only. The fine will be imposed on the audit firm. The firm being appointed will be liable to pay the penalty. From whom they'll collect it, that it's their internal policy. We don't have a responsibility there. We would say entire firm will be responsible for paying the penalty. They say entire firm, who will be responsible? All the partners will be equally responsible. Got the point? Simple. If I talk about imprisonment, who will be responsible? Only the partners who were involved in that intentionally. If I talk about penalty, not only partners who are involved in that, every partner, the entire partnership firm will be responsible for payment of penalty. And maybe internally they may collect from the engagement partners. Of course, I understand that. I'm not denying that. But the Companies Act says the entire firm will be responsible. We'll collect from the firm. They may collect internally from their engagement partners only, or all may equally share, or maybe share in the profit in the profit sharing ratio. It's their internal choice. I don't talk about that. The Companies Act says I'll ask the money from the client. I'll ask the money from the auditor, nothing but the partnership firm. It's their choice how they are going to pay, but they are supposed to pay. Got the point? So this becomes the complete discussion of amendment number 2, which was already there in your material, which was already discussed in the class in detail. Anyways, I am going to revise. I have already revised again. Okay. And further, this was a question which was there in the ICM. Basically, this is not an amendment. What happened? No, this case study was there in your ICM material. There, no, by mistake, they were, instead of writing some amounts here, no. This, if you remember, we have section number 140 subsection 3. Okay, section number 140 subsection 3, which talks about an auditor. We have 140 subsection 2 rather, which talks about an auditor. When he is resigning out, when he is going out of an audit, audit before the expiry of time, a person resigning, no, he has to clearly write a reason why he is resigning and send a form called ADT3. He should be sending a form ADT3 within 30 days to the company and also ROC. In case of a government company, even to C&AG also. But if you are not meeting within 30 days of time, no, you are supposed to pay a penalty, which will be per day 500 rupees, maximum 2 lakh rupees, and minimum 50,000 rupees, or audit remuneration, whichever is lesser. This is already the penalty which is there in your material. Okay. But this question, what happened? No, there is no amendment here. Hello, please understand. There is no amendment. But problem was here, the amount is 2 lakh rupees. No, by mistake it was wrongly printed. The mistake they rectified in the ICA material. That is given as an amendment. Nothing greater than that. There is no amendment. Maximum 2 lakhs per day 500 over and above 31st day. On 31st day, of course, it's 50,000 rupees or remuneration whichever is lesser. It continues. No change. Okay. Yes. So that becomes the change which is there in the amendment. And the audit of items of financial statement, I told you know that shares issued at discount. Shares issued at discount point has been added, which is already asked in the previous exam and which is already given in your ICA material that we discussed in the class only. Okay. So what I wanted to convey here, what is the main amendment, sir? The answer is very simple. The only amendment was that audit trial concept. That is section number 143 subsection 3 extra content. Some 4 points being covered. It's a high possibility that question may come from this point only in the exam, this attempt. If not, the question may come from section number 147. Okay. I am sure you will be getting a 4 marks question. Be prepared for that. Okay. So altogether, these are the 2 amendments which I wanted to discuss in the, this video. and I am successfully done with that. Further ask me, and thank you very much for watching this video, and we'll meet on some other video. Okay, thank you. Okay, thank you. Bye.